Hello everyone, welcome back again. Today we will discuss about Rule 42 of CGST rules, that is calculation of common credit for apportionment of ITC. So what is common credit here? Common credit here means we have, for example, we have done some purchases or purchased raw material, or maybe we avail some input services and we paid GST on that purchase at the rate say 18%. Now from that purchase here we have done various kind of supply. From the same purchase we have done taxable or zero rated supply, we have done exempt supply, or we have also used for non-business purpose. But we don't know how much portion is for taxable supply, how much portion is for exempt supply, how much portion is for non-business purpose use. So ITC on such purchase is called common ITC, because from that ITC we don't know how much portion is for taxable supply, how much portion is for exempt supply, how much portion is for non-business purpose use. So that is called common credit, and we need to do some calculation of that common credit, and we need to do apportionment of that ITC as per the supply we have made. That is called calculation of common credit for apportionment of ITC. And here we have taken one example and we have done the calculation of common credit. So under Rule 42, they have given two various formula to calculate common credit for apportionment. So first one is to calculate exempt part of the ITC, that is disallowance one. So disallowance one means D1 is equal to common ITC into exempt turnover divided by total turnover. And second one is disallowance two, that is to calculate non-business part of the ITC. So D2 is equal to common ITC into 5%. So 5% of the common ITC will be considered as a non-business part as per the rules. So coming to this table here, let's assume that total ITC is T. This is for calculation purpose. So total ITC is T. ITC used exclusively for non-business purpose is T1. ITC used exclusively for exempt supply is T2. ITC exclusively used for taxable zero rate supply is T3. Blocked ITC is T4. Common credit is C1. Exempt turnover is E. Total turnover is F. And this is formula I have mentioned here, D1 and D2. So for exempt supply D1, non-business part D2, and eligible ITC is equal to C2. So let's calculate common credit first. So to calculate common credit here, for example, I have taken this total ITC for IGST, it is 10 lakh, for SGST 5 lakh, for CGST 5 lakh. So this total ITC we have currently. From that ITC here you can see I have mentioned some amount like exclusively used for non-business purpose or exclusively for exam supply. What is it? It is actually some of the part of the ITC that we already know that which amount is for what kind of supply. So what we know we will deduct here. So 1 lakh is for exclusively used for non-business purpose. So 1,70,000 exempt supply, 50,000 taxable supply, blocked ITC 80,000. These all amount we will deduct from total ITC to calculate common credit here. So here is equal to total ITC minus sum into bracket T1, T2, T3, T4. Bracket over, enter. So this 7 lakh is common credit. Why it is common credit? Because we don't know how much part of this credit is for taxable supply, how much part is for exempt supply, how much part of the ITC is for non-business purpose. So ITC where we don't know how much amount is for which kind of what kind of supply, that ITC is called common credit. So this 7 lakh is common credit. So we'll drag the formula here. So same for SGST and CGST. That is 3,80,000. Now to do the apportionment, let's assume exempt turnover is 50 lakh. For SGST it is 12,50,000. For CGST it is 12,50,000. And total turnover is 2 crore. For IGST 50 lakh for CGST and 50 lakh for CGST and SGST. Now we will do the calculation as per this formula I mentioned on the right side here. So here D1 means to calculate the part of the exempt supply from the common credit here is equal to D1 is equal to exempt turnover divided by total turnover into common credit, that is 7 lakh here. So 1,75,000 out of the common credit is for exempt supply. So I will drag the formula here. So same way for SGST and CGST, that is 95,000. So next one is to calculate non-business part of the ITC. So here D2 is equal to 5% of the common credit. So 7 lakh into 5%. So 35,000 is for non-business purpose from the common credit. So same way for SGST and CGST, that is 19,000. So this is non-business part of the ITC common credit. Here from common credit we will deduct this D1 and D2 to calculate eligible ITC, because exempt supply and non-business use is not allowed for ITC availment. So we will deduct from common credit and the remaining amount will come as an eligible ITC. So is equal to C1 common credit minus sum into bracket D1 plus D2 into the 4,90,000 is our eligible ITC. I will direct the formula again. So 2,66,000 for SGST and CGST here. Now this is our eligible ITC. But from this eligible ITC, we also calculate this total ITC available. Why it is different? Because here you can see this eligible ITC, but here you can see this taxable supply or zero rated supply, which is allowed for ITC availment, right? So from this supply we have to add this ITC to our eligible ITC, because we deducted before here to calculate the common credit. And remaining like non-business or exempt supply or blocked credit, that is not allowed for the ITC availment, so that we will not consider, but we have to add this taxable or zero rated supply here. So here is equal to eligible ITC plus taxable or zero rated supply ITC. Enter. So 5,40,000 is our total eligible ITC or total ITC which is available for us to use. The same way for SGST and CGST. Now if from this total ITC, so from common credit, if we deduct this total available ITC, so remaining will be our ineligible ITC. So is equal to, from this common credit we will deduct which is total ITC available. So 1,60,000 is our total ineligible ITC. Same way for SGST, same way for CGST. Now we have done this calculation of common credit. Here we find out what is our eligible ITC, what is our non or ineligible ITC. So we need to keep some points in mind here. For example, you have done this calculation before filing your GSTR 3B return. In that case, you only avail eligible ITC and file your return. That is straightforward. If you have not filed your GSTR 3B, but in case you already filed your GSTR 3B, you avail the common credit. In that case, you have to reverse your ITC in your next return, and you have to reverse with interest. So in that case you can reverse your ITC in next month return. But in the third point, if you have filed your return, avail common credit, and in your credit ledger balance is not available to reverse the ITC and pay the tax with interest, so in that case you have to manually file this DRC03 form and submit it to pay the tax. To pay the ineligible ITC with interest, you have to file this DRC03 form and pay the tax. So this is calculation of common credit for apportionment of ITC. So now let's come to this rule 43 of CGST rules, that is calculation of common credit for capital goods. So capital goods means fixed asset, or let's say we purchase a machinery, that machinery is capital goods for the company. And common credit means that machinery we are using for the various kind of supply, means it is used for common use. It is same machinery is used for taxable supply, for exempt supply also, and for non-business use for also. So that purchase of that machinery we paid GST, like, and that GST is called common credit here, that ITC is called common credit here. So calculation of common credit for capital goods. And under rule 43, to calculate and do the apportionment of common credit, they have given one formula to calculate ineligible ITC, that is ineligible ITC is equal to common credit into exempt turnover divided by total turnover. Now another important rule we need to understand here, that is conversion from exclusive to common use subject to deduction of 5% per quarter. Means, for example, we purchase some machinery for exclusively to make exempt supply only. So the machinery is used for exclusively for exempt supply only. But after some time we stopped doing that exempt supply and we started using that machinery for common use. So that is called conversion from exclusively exempt supply to common use. So because of that conversion we are doing from exempt supply to common supply. So we need to calculate ineligible ITC for exempt supply and common ITC for common supply. Because of the exempt supply, we cannot avail the ITC, but after converting to common supply, ITC is available for taxable supply. So that is the reason we need to do this calculation here. So let's say for 2 years we have done exclusively exempt supply from that machinery, and when we purchase that machinery, ITC of 1,20,000 for the IGST part is available. For CGST it is 75,000. For SGST it is 75,000. From this total ITC of 1,20,000, now for 2 years means there are in 1 year there is 4 quarter. So total 8 quarter for 2 years, and 5% per quarter we need to deduct here. So 5% into 8 is equal to total 40% of the total ITC we will need to deduct as ineligible ITC. So from 1,20,000 we need to deduct 40%. So 1,20,000 into 5% into 8. So 5% into 8 is equal to 40%. So 1,20,000 into 40% is equal to 48,000. So 48,000 is our total ineligible ITC here. And after deducting this 48,000 from 1,20,000, 72,000 is our common ITC. So for same for CGST and same for SGST, that is 45,000. So this is conversion from exclusive to common use. Now coming to this table here, you can see here we have total ITC here. For IGST is 1 lakh, CGST 50,000 and SGST is 50,000. This is for common supply already. We have this ITC. And another ITC for the conversion here we have, that is 72,000, 45,000, 45,000. So we need to total this ITC here to calculate common ITC. So is equal to 1 lakh plus 72,000 is equal to 1 lakh 72,000. Same way for CGST and SGST, that is 95,000. So total common ITC for the lifetime of capital goods is 1 lakh 72,000, 95,000 and 95,000. Because under the GST law and under the CGST rules, the useful life of the asset is 60 months only. So this 1,72,000 is total common ITC for entire useful life of asset, that is 60 months. For entire whole 60 months this ITC is 1,72,000, 95,000 and 95,000. So here we need to calculate common ITC per month. So as per the useful life it is 60 months. So is equal to 1,72,000 divided by 60. So 2866.67 is the common ITC per month. Same way for CGST and SGST, that is 1583.33. Now to calculate ineligible ITC per month, we assume that exempt turnover is 50 lakh and total turnover is 2 crore for IGST, CGST and SGST. So to calculate ineligible ITC formula, I have already explained you before. Here common ITC into exempt turnover divided by total turnover. So here is equal to 50 lakh divided by 2 crore into common ITC per month. So this is ineligible ITC per month for IGST 716.67. We'll drag the formula here. So that is for CGST 395.83 and same for SGST here. So this is ineligible ITC per month from the common credit we calculated. Now this an ineligible ITC we need to add to our total output liability per month when we file our GSTR 3B. and we will pay this tax every time we file our GSTR 3B. So this 716.67 is added to our output liability every time we file our GSTR 3B till end of the use of the asset. Means like useful life of the asset is 5 years. 2 years is already gone now. Remaining 3 years, we will add this tax amount to our output liability, and we will pay this tax every time we file our GSTR 3B with interest. Now we need to keep some points here in mind that as per the CGST rules, useful life of asset is 60 months under Rule 43. Next, while calculating eligible ITC for conversion from exclusive supply to common supply, 5% of the ITC per quarter from the date of purchase of the asset to be deducted till completion of 5 years from date of purchase. That we already I have explained here. While converting, we have to deduct ineligible ITC from the date of purchase till whatever year we use for exempt supply. So that part of exempt supply we have deduct that part of ITC, and we find need to calculate common ITC from that total ITC. So while converting from exclusive to common use, we have to do this calculation and find out common ITC after deducting ineligible ITC as per the rules 5% per quarter. Next, total ineligible ITC per month to be added to output liability and paid with interest while filing GSTR 3B till 5 years from purchase date of asset. So as I explained here, we have to pay this ineligible ITC. We have to add this amount to our output liability every time we file our GSTR 3B till end of the useful life of the asset from the date of purchase of the asset. So whatever years are remaining for the useful life, we have till end we have to add this amount from to our output liability while filing GSTR 3B and pay the tax every time with interest. So this is all about Rule 42 and 43 of CGST rules, and I hope you got clear concept of both the rules and understood what is calculation of common credit and apportionment of ITC here. Hope you enjoy the video. Thanks for watching.